If you're a day trader, you'll want to watch this. Understanding the fundamentals of the bid and the ask spread is going to be a key factor in your trading success. Every time that you enter a trade, the bid and the ask is going to play a role in that. So have you ever wondered if you should buy at the bid or the ask? Let's talk about it. Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And in this video, we're going to be talking about the bid and the ask spread. So what is it and how can you use it to start building more successful trading setups, okay? But first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also, make sure that you subscribe and click the notification bell so that you'll get notified anytime I upload a new video for you guys. We talked about the bid and the ask a little bit on the channel, but what is it really? When you really think about it, the stock market is a huge collection of buyers and sellers. So at any given time, a stock is being bought and sold. When you want to buy something at an auction, what do? You put in a bid for it. So a bid for ownership. And then when you're selling something, you're going to ask for a potential buyer to bid to sell what you want. So let's put that into terms of the entire stock market. When we have a bid and ask spread, that represents the difference in between the highest bid price of buyers and the lowest price of sellers. Everybody wants a deal, and this is what you're going to see when you're looking at the ask and the bid spread. So just remember this. The bid is going to be the highest price that a trader is willing to pay to get into a stock. And then the ask is going to be the lowest price that a trader is willing to sell their stock for right now, the time being. So for example, let's say right now that this stock has a bid ask of $10 and $10.15. Right now, the most that buyers are going to be willing to pay for that is going to be $10, and the least that somebody is willing to sell it out for is going to be $10.15. So if you were looking to get into that trade, you're probably not going to get it less than $10.15 until a trade opens up available for that. And on the opposite, if you're looking to sell it to somebody, you're probably not going to get it for more than $10. So the difference between the ask and the bid, the spread, is a huge indicator of liquidity in a stock. So every time when you hear me say get into a liquid stock, get into a liquid stock, is it liquid? Is it liquid? This is what we're talking about. So when we say liquid, that means easy to get in and out of, like a thought. Seriously, have you ever been trying to get into a trade but you just cannot seem to get in? You keep increasing your bid price until finally you get into the trade, and usually it's going to be a little bit higher than you originally wanted to, but you really wanted to get into the trade, and then it drops after that. But that's a whole nother story. Think about it like this. Stocks that have a smaller or tighter bid and ask spread are more liquid and easier to get into. So you want a smaller spread. A lot of really good professional traders, they keep their spread about 5 cents, 5 to 10 cents. So if your bid and your ask is more than 10 cents, no ma'am. Large popular companies like Google, Apple, and Netflix, they're usually going to have smaller spreads than stocks that really aren't as actively traded. They're going to have wider spreads, and they're going to be less liquid and more difficult to secure the trade at the price that you want. This is why this is key for day traders. So remember this. Also, it's going to help to look at the differences between the bid and the ask, like percentage wise. So try not to focus so much on the actual cent, because stocks that have a higher price normally have a wider spread also, but it's going to have the same percentage, if that makes sense. So for example, think about a stock that's going for $10 right now, and it has a 10 cents bid and ask spread. So that's going to be a spread of 1%. Then look at a stock that's trading at $1,000 with a $1 spread. The bid and the ask is wider than the previous, but it's actually only 0.1% of the price. So it's actually less. So think about it like that as far as percentages too when you're dealing with higher price stocks. One way that you can really use this to your advantage is to think about it like supply and demand. And you're going to be able to find short-term short-term trends in the stocks by looking at the spread volume. So pay attention to the volume. All right, so when you're looking at quotes, see the number next to the bid and the ask price. That's going to be the current number of shares available at each of those prices. So looking right here, for example, we see a bid of 145. What is 145.06? The stock price that you see is 144.98. And you can use this to get an idea of the future direction of your stock trend, looking at the bid and the ask amount. Just remember this: when the bid volume is higher than the ask volume, then the selling is going to be stronger and the price is more likely to go down. But when the ask volume is higher than the bid volume, then the buying power is stronger in that situation, and then the price is more likely to go up. So when you see more volume on either side, use that to your advantage to get into short-term price movements. All right, and the last question: should you buy the bid or the ask? Well, let's look at level 2 data. So right here, I'm looking at Apple. We're on Apple, and this is our level 2 data right here. So we said before that the bid is the most that a buyer is willing to pay, and the ask is the lowest that a seller is willing to take. So this list is going to show you all of those orders, and the sizes next to that is the number of shares available at those prices. These are all limit orders, so these are limit orders. Obviously, you want to get the better price when you're trading. So instead of just accepting the market price, this is pretty much the best that you're going to get, but this is probably due to after hours trading because the stock has gone up 10 cents. So I'm actually filming this in after hours, so kind of ignore this 144 price right now because the stock has increased in after hours. So that's what's going on with these bid and ask right here. But yeah, as far as a lot of people are going to try to buy their stocks a little bit lower and they're going to want to sell them a little bit higher. So do you want to buy or sell at the ask or bid? It really just depends on the numbers here. So look here, if you want to buy a certain stock, you can see what's being shown on the bid and how many orders need to be filled to get to that best price. So right here, let's say if you wanted to get in right now, the best price that you can get in is probably going to be 145.18. There's 5 shares available for that. Once that's gone, it's going to move up to 145.20. Once those 5 are gone, it's going to move up to 145.25. And then after that, you see 100 is available now. So once that 106 is gone, then it's going to go up to 145.30. So I don't know if you guys are in Webull chat rooms, but I know a lot of people say, don't buy the bid, don't buy the bid, buy the ask. Because when you buy the ask, that's what's going to help increase that stock price. Don't buy the bid if you want the stock to go up. Buy the ask. The same thing is if you're selling, you're going to look over here at the bid. So what are people bidding to buy in? The best price that you're going to get right now is 145.01. And this is what you call market depth. So a level 1 screen is going to show just the number of buyers and sellers with the open orders at the price that you're looking at, but you really don't have a lot of information, about how many other buyers and sellers there are out there at different prices. When you get into the level 2 screen, now look at all that. When you get into the level 2 screen, that's going to show you the number of buyers and sellers at each price level. When you add up those numbers of buyers and sellers, then you'll be able to kind of determine whether there's more pressure to buy or sell that stock. And as you can see, this is going crazy right now. It's going crazy. The bid and the ask spread is basically just negotiation. So if you want to buy a share, you're going to have to pay the ask price. If you want to sell shares quickly, you're going to have to take the bid price. I don't want to say to be successful, but to get in quickly, you're going to have to be able to stand up for yourself, walk away from a trade if it's just going crazy. All right, so that was a little bit of information about the bid and the ask. I hope you guys enjoyed that video, but make sure you check this video out to get more information about when exactly you should get into your trades, the exact second. So check that video out. It's pretty fire. Yeah.